What's up from Memphis? Memphis in the house. New York City in the house. Columbia in the house. What's up, guys? Thank you for joining me. Thank you for joining me. Bless. Renko, that's right. Today we are going over Renko. Renko training for today, August 11th. Man, it's already August 11th. We're entering mid-August already. After that, we'll be in September, and then the year is practically over. That's crazy, man. This year is going by fast. Really, really fast. Right? So, special edition, Renkos, tonight, August 11th, and then Tuesday, August the 13th. All right? I'll be doing 2 special IML TV sessions, and once I'm with that, they will be at the bottom of my favorites of IML TV videos that you guys will be able to watch. Montreal, Canada, what's going on, man? Montreal is like secretly my second home. I haven't been in Montreal in a long time. I need to come visit, right? My family keeps asking about me, so I need to come visit. Miami's in the house. Detroit's in the house. Thank you for joining me. Welcome. Atlanta in the house. Yes, we're going over Renkos tonight, guys. Renkos training. Absolutely. Cleveland, Ohio. What's up? Definitely in the building. So let's rock and roll. Let's get right to it. Let's switch over to Renkos. Now, Renkos. All right, this is the infamous Renko's training. And what we're going to do here is basically, I'm going to show you guys how to create a simple strategy utilizing Renko's. I'm going to break down exactly what the difference between Renko's candlesticks are, go over some of the basics, and then we're going to analyze the charts, of course, go over every setup and take it from there. All right, guys? Sacramento in the house, thank you. Orlando in the house, thank you. All right, so let's rock and roll. Let's jump right into it. All right, so Renkos, for whatever reason, there are not a lot of people that actually trade Renko charts. Actually, in fact, Renko is something a lot of people have never heard about. You know, most people don't even know about Renkos, right? Most of you guys heard about Renkos here on IML TV with me for the very first time. I know, what's his name? Oren Wright teaches it now. He studied it, but I'm safe to say I was the first one to actually use Renkos going way back. Renko is really an awesome way to analyze the chart. And what's up from Vegas, man? Thank you for joining me. Hope all is well. Appreciate it. Sacramento in the house. Definitely. So I believe a couple of reasons why people don't know about Renkos or don't know why it exists or don't know how to even use it. Knowing how to trade Renkos is not as popular, right? Of course, like candlesticks. And for most people who use MT4, like the axis of Renko charts is rarely an option, right? But for those who are brand new and have never seen Renkos, so again, what I did here was go to the top. I went from candlesticks, right? Normal candlesticks to Renkos. Now, if you're on TradingView, Renkos is only available on the daily, weekly, and monthly. If you have the pro account, you can use all of the other smaller time frames. All right. Now, if you're serious about your trading career and you really want to take it to that next level, I suggest you should upgrade to a pro account. It is not required. I'm not telling you have to do it, but definitely if you want to understand how Renkos works, you're going to need it. All right, you're going to want to be able to utilize it. And then for your MT4, for those who trade on MT4, you're going to have to download it. You can go online. When I find it, I'll find like a link. I'll have it for you guys on Tuesday. I have to find like an online link that allows you to download Renkos on your MT4 so you guys can view it there, right? But the major difference between making a trade with regular candlesticks and making a trade with Renkos is that Renkos doesn't have time factored into it. So like, unlike, so for example, let's say I go on the 1 minute, right? And I talked about this, I think, last week or 2 weeks ago. We have new time frames, right? TradingView introduced new time frames. You have the 1 second, 5 second, 30 seconds. All right. This is all BS. Nobody should be trading on the 1 second, 30 second. Like, that's ridiculous. All right. You're not going to make consistent money trading on these time frames. So I hope nobody's utilizing this, right? As you guys can see, look at my favorites. I trade off the weekly, daily, and my entries on either the 4 hour or 1 hour. That's mostly how I operate. All right. So, like I was saying, maybe I should use dual screen so you guys can see this, right? So I'm gonna go on the 1 minute time frame, right? So I'm on the 1 minute time frame for Renkos, and then I'm on the 1 minute for candlesticks, right? Now here's the difference. You're gonna see it every 1 minute. A new candlestick is gonna form, right? So watch when it turns into 9:12. Right now it's 9:11. So you see right there, 9:12, candlestick growing, right? And we're gonna watch because I want you guys to see this. So this is one. So a new candlestick formed on that 1 minute right there. So you guys see that? See that new bearish? After that bullish, a bearish candlestick was forming. Notice here on Renko, nothing formed, right? That's really the major difference between candlestick and Renkos. Renkos does not factor in time. All right, so candlesticks moves up and down based off of volume, based off of Donald Trump tweets, and based off time frame. Renkos can literally sit right where it's at right now. So I just wanted to show you guys that, especially for those who are like brand new. So you see here on this 1 minute how price didn't go nowhere. What price does, right? What price does, for example, let's say on a regular candlestick, you happen to be like on the 4 hour, or we're priced only, not even the 4 hour, let's say on the 5 minute, even 1 minute, price moves 10 minutes, 10 pips, right? If you were using candlesticks on that same thing, right, you'll have multiple candlesticks just for that 10 pip movement, right? Whereas Renkos, it's all, price is all in that brick right there, right? And this is Renkos right here. They're made up of bricks. Now, one of the things that you also notice, the difference between Renkos and candlesticks is candlesticks doesn't have as much wicks, right? Look how cleaner Renkos is. Look at that. You got a clean uptrend, you got a clean downtrend, right? Way easier. And the only way a new brick forms is if price moves. So right here, you see how this is trying to form right here? You see a brick forming, it keeps going up and down. It won't become solid until the brick gets right there. It has to stay there for an allocated time period. And then once it becomes a solid red, then boom. You see how it disappeared? Because Renkos only cares about price. It's only going to move when price moves. So in order for this to go on a downtrend, price needs to hit somewhere around here, right? Around 97.49. And it needs to hold, right? In order for price to go up, it needs a solid brick to get around 97.52. And then so on and so forth, right? Every brick is equivalent to each other. Even when this was going on this uptrend, if you look to the left, right, every brick is equivalent to each other. Whereas candlesticks, right, you got fluctuations up and down, right? No candlestick is the same size. They might look like the same size, but they're not. Different price. points, different highs and lows, long wicks, small wicks, medium-sized wicks. Some candlesticks have no wicks, right? So you get a lot of, a lot of information with candles, but with Renkos, it's just pure price. And it's for people who actually use Renkos, and I have a lot of people who are on my team, work with me, who utilize Renkos, just Renkos, and absolutely loves it, right? So how are we gonna utilize Renkos, right? And how are we gonna utilize this when analyzing the charts? Now, understand something. Because Renkos, right, doesn't move the same way like candlesticks, and the best way I can illustrate this is, let's go back to candlestick for a second here. All right. And let's take perfect example right here. Right? So you guys see this bearish, or actually I should say bullish flag right here. Right? This bullish flag right before this uptrend. Right? So look how many 4-hour candlesticks it took to form before you got that up move. Now look at that same area in Renkos. Look at that. Just bricks. One solid brick. It took all those candlesticks. It took all those candlesticks. So it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It took 14 4-hour candlesticks. Think about that for a second. 14 4-hour candlesticks. Right? You're talking about 56 hours, guys. 56 hours. That's more than 2 days. More than 2 days before you got your uptrend here. Whereas in Renkos, it was just one brick. Right there. One solid brick. Right here. Boom. It took all of that price and it put it inside one brick. All right. So looking at Renkos, it gets rid of a lot of the noise. Right? All right. You guys saying you lost me? Hello, hello, hello. First Renko training back in March. Lost me. You guys hear me? Are you guys still connected? Back? All right. I don't know. All right. You guys hear me? Some people are saying, all right, cool. Some people saying they're not able to hear me. right? So Renko's, right, takes all of that noise, all of that price, and just puts it in one brick, right? It gets rid of a lot of the noise, which is very, very important, especially trying to determine whether price is going to go up, going to go down, so on and so forth. So what else do we notice about Renko's? Renko's doesn't have as many wicks as candlesticks, right? You don't see a lot of wicks on candlesticks. I mean on Renko's compared to candlesticks. With candlesticks, you have wicks everywhere. With Renko's, not so much. With Renko's, not so much. And one thing to realize, especially with Renko's, it's great for the psychology, right? So a lot of you guys struggle with psychology. So as I heard some of you guys saying, you know, a lot of these GB pairs, they keep going on a downtrend, they keep going on a downtrend. So if you look at Renko's here, look. No noise compared to candlesticks. Look at the same downtrend on GJ, right? Look at that same downtrend right here. We go on candlestick, right? There's a lot of noise. You have a lot of noise. You gotta worry about all these flags. You gotta worry about all these little pullbacks, these little, right? And for a lot of people, that messes with your psychology. Wondering if price is ready to reverse, price is gonna keep going down, all of these other things. Whereas Renko's is just smooth. Very, very smooth. You had a clean downtrend. It's easier to ride the trends. And matter of fact, it's easier to even identify your flags. Much easier to identify your flags, your pullbacks, all of those, right? Look at how easy it is to identify these flags. So now you know when a flag pattern is forming, right? Unlike candlesticks, Renko doesn't make all these complex patterns. You can pretty much see everything what's going on. Whether a double bottom's forming, whether a flag pattern's forming, how high price is going, how low price is going, easier to see your W's, your M's, a lot easier with that. So now it's just basically putting a strategy as to how to get into these trades. Now you can analyze the market the same way you do with candlesticks, right? Like here, I'm still analyzing the DXY. I'm still inside this channel here, right? Still inside this channel right here. And if you wanted, you could absolutely trade naked, right? Some people actually trade naked, trading like this. The beauty with Renko's, you don't need much. Where candlesticks, you got to understand reversal patterns. You got to understand bullish engulfing, bearish engulfing, all these different type of things. With Renko's, you don't need much. I can add one indicator. Let's say a MACD. Right? And just this alone will help me decide whether or not I want to buy or sell. So when this downtrend was coming, right? So price hit the top of this channel here. Let's say I wanted to jump in on the sell, right? I'll still follow my rules. What's the rules for entry? How many time frames do I want to jump down? Right? How many time frames do I want to jump down? All right, am I on? Do you guys hear me? 2 time frames. All right, so we still got the lag, so nothing I can do there. 2 time frames. So if I'm on the 4 hour and I jump down 2 time frames, so 1 hour, I'm gonna end up on the 30-minute. Now look at this. If I wanted to get in on the sell, look at how this lines up, right? Now here's the thing. If I want to get in on this sell, boom, the moment price starts to turn, right? I got my signal crossover. I just came to high, crossing over my signal line, right? I got a trend change right around here on my MACD crossover. Very key, right? And now I got this clean downtrend. So you're talking about from the break somewhere around here all the way down, you know, good 90 pips. Right? And that's just off a 30-minute, 15-minute, you know, break. Whereas if you would have did this on candlesticks, right? Look how many times you get that same crossover. Right? Look how many times with candlesticks. Crossover here, crossover there, crossover here, crossover there, crossover here, crossover there, crossover here. Too many crossovers. With Renkos, you don't get all those crossovers. You rarely. So when you get that buy or sell signal, you're literally getting that buy or sell signal, especially when it's coming from the higher time frames. All right. So the beauty with Renkos, again, one last time to repeat myself, is one, it doesn't factor in noise as much as candlestick does. It takes out a lot of the noise, which makes trading very, very simple. Number two, it allows you to ride your trades a lot longer and easier, guys. Think about all these downtrends that we had on a lot of pairs, like when Euro New Zealand pretty much went down for majority of the summer. When Euro New Zealand went down for majority of the summer, pretty much from, go to the 1 hour, pretty much from August now, go on the 4 hour, yeah, pretty much from June all the way down, this entire downtrend. Look how easy it was to identify and get in on a trend like this. Look how easy it is to get on an uptrend like this, right? I got my crossover here, right? I got my entry right around here. And then I got a 500 pip move to the upside. No stress. No bearish breaks pulling back. So there's no reason for me to jump out of my trade. No, nothing. Every time I did get a pullback, remember, I'm overall in an uptrend now. So these pullbacks here, look at my MACD, right? No need for me to sell. I didn't get no crossover, so I'm not selling. I'm just riding the trend. Easy. Look what price is doing. Pulling. It came down, but again, overall, we're still in this uptrend. So it's a lot easier for me to ride the trends. A lot easier for me to ride the trends. When I do see flags like this, it's easier for me when I go down to a smaller time frame, like a 15-minute, right? It's a lot easier for me to know exactly when to buy and sell. When to get in on that sell opportunity. And you know what's even great? When you do jump in a trade, right? And we're going to talk more about this later on. When you do jump in a trade, you see here, So what's the rule of thumb when you get in a trade, right? Where's your stop loss place? Like, how do I enter my trades, right? Where do I place my stop loss? So if I'm entering here, where normally would my stop loss be? All right. At the last high, right? So that's what I would normally do based off of candlesticks, right? Based off of candlesticks. But look, that's 105 pip stop loss. Even though I got the big move down here, 376 pips, but I don't want 105 pip stop loss. That's too big. You see that brick with a wick right there? You see this brick with a wick right there? My stop loss would be, based off of Renko's, my stop loss would be above or below the previous wick, utilizing a smaller time frame. So wherever I enter the market at, so basically if I'm entering on the 15-minute here, my stop loss is above this wick right here, not above this previous high. So that's how I'm able to reduce my risk in the market. So instead of 105 pips, now I got 42 pips. If I wanted to reduce it more, all I would do was slide down to a smaller time frame, right? And same thing here. If my entry is right around here, my stop loss is right around here, right around this brick area, right? And notice every time you go down to a smaller time frame, guess what? Your risk in the market gets a lot smaller. So let's go on this 3-minute time frame, for example. So you see here, this was the 15-minute stop loss. Based on the 3-minute, and mind you, this is a pretty good stop loss. So if I enter here, my stop loss is there. It's about 43 pips. So 15 minutes. $43 pip stop loss. Not too bad considering you caught over 300 pips. But I moved down to the 3-minute. Now, look what I got there. I got a wick with a brick. Right? So now my stop loss is right above there. So my entry would be right here, and my stop loss is right above there. So now 21 pips. See that? So basically, whenever I'm entering the market, right? So again, the rules still apply. I'm waiting for a MACD crossover. I'm waiting for all those things right there. So my stop loss, instead of the previous high and low based off of candlesticks, my stop loss is going to be above or below the previous wick. So now I reduce my risk to the market. And that's what it's all about. The more you reduce your risk to the market, and you're still able to keep that high reward, right? You're still able to keep that 300 pip. You got a 300 pip move. Look at that, 350 pips, and you're only risking 21 pips, right? You'll take those odds any day of the week, right? And that's the type of opportunities that Renko's offers. Now, somebody stated in the comments, like when, lost again. Let's see here. Lost again. You guys hear me? You guys hear me? I don't know why you guys keep losing. Let me see support real quick. Is it just me or is this everybody? Is this just me or is this everybody? Sorry guys, we're just gonna have to work through it. Unfortunately, yeah. Just have to work through it, guys. Just keep, if I go off, just refresh and come back on. I go off, refresh, come back on. So, like I was saying, the beauty about utilizing Renko, especially when you jump into trade, again, your system, whether you use my system, your system, it doesn't matter, right? The beauty is now you get to get high reward, minimal risk in the market. Like 21 pips, that's nothing. That's absolutely nothing. I'll put that up any day of the week, right? Now, somebody was stating, I was trying to go back to, it happens a lot during other sessions too. Okay, so it's not my fault. All right, cool. That's all I wanted to know, right? It happens a lot during other people's session too. Hopefully, we're supposed to be getting a new system, but I don't know when that's going to be launched, so I don't want to say when that's going to be released. But somebody said, trying to find the comment. It seems that when you compare a move in Renkos, it seems hours have passed when you compare a move to candles. Yes, my financial future, absolutely. Because again, Renkos focuses on pure price, not noise. Pure price, not noise. So I would rather not be, right? I would rather wait hours until the move is actually ready to go on that uptrend or downtrend. Like, for example, you guys got to understand, when I'm analyzing the charts on candlesticks, right? And sometimes I tell you, hey guys, look for this buy or look for this sell. So like a lot of these Great Britain pound pairs, when you look at them, so let's go back to GJ for a second. And then I'm going to get to the charts and the markups and everything like that, guys. I just wanted to do this early training and then we'll, mark up the charts. So let's look at GJ for a second. This is the beauty about Renkos. We've been looking, a lot of people have been looking for reversal on all these Great Britain pound pairs, and we're going to look at them. The last time price was supposed to reverse, came to a major support, was back in January, right? Look at the date. January was when we hit this major support. Or this major demand zone. Then price came again in May, right? So in May. This was back in January, so in May. So in May, price never reversed like it did here and went on that big uptrend. It never reversed like it did here and went on that big uptrend. No uptrend here. Price has been on a downtrend ever since. So looking at Renkos, we should have never been buying. We should have always been selling. All we should have been doing is really, every time we get a flag, look to sell again, look to sell again, look to sell again, right? Right? Every time we get a flag, look to sell again, look to sell again. So again, rules here. All I would do is probably go to a 15-minute, 5-minute, and every time I got a flag, right? Boom. I'm looking to sell. right? This is basically since July. Boom, I'm looking to sell. This flag form right here. Now, here's the thing. You don't have to catch every single flag because that's going to force you to go down to even smaller time frames, right? But let's say I wanted to catch this flag. I see it formulating. Then I can go down to a smaller time frame, probably to a 5-minute, right? I see this 5-minute flag. So even when this come, look at this. No ins and outs, no nothing. So when price was formulating and doing all of this, look at that. One clean cut right here. Look at that. One clean cut right there. You got your entry. My entry is right around here. My stop loss is right above that previous wick right there. And I got this entire down move right here. Look, based on my MACD, price never came and even retested to reverse. And that's just on the 5-minute. So it just goes to show you, even on the 5-minute, the smaller time frames, how powerful Renko's is. How strong a trend is. Look at that. Right there. Look at that. I would have had a 22 pip stop loss and over a 400 pip move to the downside. Wait for another flag. Right? Again, you always want to be careful of going down too small of a time frame. Like I like to, especially with Renkos, especially when it comes to flags, I like to go no lower than the 15. So I would have probably caught this one, probably missed this one, and then boom, you had another opportunity right here. One last one. Look at this. And this is without using moving averages, Fibonacci. I just put in a MACD to let me know that when price is going to continue within the trend. I got a continuation trend here. I got a continuation trend over here. I got a continuation trend over here. Every single time. Every